Don't let the paper price of silver fool you. While the market distracts you with every dip and rally, there's a much bigger story unfolding behind the scenes, a story told not in dollars, but in ounces. The quiet, relentless drain on the world's physical silver is happening right now, and the vaults that are supposed to back the entire paper market are being emptied at a staggering pace. What you're about to hear is not speculation, it's a warning. The physical market is practically screaming that a supply crisis is underway. Let's look at the nerve center of the Western silver market, the COMEX. Total silver inventories there have plummeted by nearly a third since October 2025, a massive outflow of physical metal. More importantly, the registered inventory, the silver that is actually available for delivery against futures contracts, has fallen below the critical psychological level of 90 million ounces. To put that into perspective, the paper claims on silver are now more than 400% larger than the physical metal available to back them. The situation became even more dramatic as the March delivery month began, with immediate delivery requests for over 52 million ounces, which is more than 60% of the entire registered inventory, demanded almost at once. This isn't just a Western phenomenon, it's a global run on physical metal. Over in China, inventories on the Shanghai Futures Exchange have collapsed to their lowest point since 2015. The available stockpiles are now nearly 89% lower than their peak in early 2021, signaling an unprecedented physical drawdown. This intense demand has caused silver in Shanghai to trade at a premium of more than 10 over the price in London and New York. This isn't nervous retail speculation. It's a coordinated move by major industrial users and institutions who are clearly losing faith in paper promises and demanding the real physical metal. So you have to ask yourself, why the sudden global rush for physical silver? It's because the demand for the actual metal isn't just real, it's non-negotiable, and it's completely overwhelming the available supply. The world is facing a structural silver deficit, with 2026 projected to be the 6th straight year that we use far more silver than we mine. This isn't a temporary problem. The demand is baked into our future. The explosive growth in electric vehicles, which use up to double the silver of a traditional car, is set to consume over 70 million ounces this year alone. The green energy transition depends on solar panels, each of which needs physical silver to function. On top of that, the artificial intelligence revolution has created a brand new and voracious source of demand, as AI data centers require vastly more silver for their advanced components than traditional servers. While this insatiable industrial demand permanently consumes the metal, supply remains stubbornly inflexible. Roughly 78% of all silver is mined as a byproduct of copper, lead, and zinc. Miners can't just flip a switch to produce more silver, even when the price goes up. This disconnect between a paper price held down by financial games and a physical reality of draining vaults and soaring industrial demand cannot last forever. The tension is building in the system. A significant upward price correction isn't just possible, it's becoming inevitable. If you want to stay ahead of what's happening and protect yourself from the illusion of the paper market, make sure you subscribe and hit that notification bell. Don't get caught focusing on the paper market's illusion. The real story is written on the warehouse ledgers. The vaults in both New York and Shanghai are being drained at an unprecedented rate. That is the only signal you need to understand that the true price of silver, driven by an irreversible technological demand and an inelastic supply, is about to break free.